Hey, I'm Chris, and this is your product spotlight and housing update for the week of March 10, 2023. We all know how the wrong loan officer can stand in the way of a great transaction and referrals. So obviously, there's a lot of value in having the right partner. Here are some of those things. 1. Mortgage is my career. It's not just a job. It's what gives my family shelter, food, and comfort. So for me, doing a great job is really important. 2, I'm fast and thorough. Why? Because time kills all deals. 3, 100% of my pre-approvals are complete, period, or exclamation point. 4, as a broker, I control the fees so your clients pay fewer of them. 5, as a wholesale broker, I have no overhead, so my rates are lower. And 6, I get to help people create wealth, so it's kind of a big deal. However volatile rates may have been in the past 2 weeks, they're at risk of much larger swings in the 2 weeks ahead. From February 2nd through the 15th, the average 30-year fixed rate increased by a whopping 0.75%. Since then, we've drifted up and over 7% as the market waits on several highly consequential economic reports. Meanwhile, the updated jobs report came out, and it seems that the Fed may have forgotten to remove seasonal workers from the report, which ends up dropping unemployment, not raising it. Sooner or later, this will show up on the streets, but for now, we call it hopeful good news in the making. Of course, this likely means more rate hikes, and while they don't directly dictate mortgage rates, they do have an impact emotionally. In the past week, mortgage rates crept back over 7%, inventory dropped again, and the 10-year bond yield broke over 4%, which really just means that mortgage bonds are less desirable to investors. Meanwhile, the Fed's aggressive movement and messaging is making many banks nervous, with one in particular hitting the headlines. Silicon Valley Bank lost $1.8 billion in the sale of treasuries and mortgage-backed securities that it had invested in due to rising interest rates that the Fed set. The bank then raised money to safeguard itself against its losses, and then, at end of day, did a press release that was received poorly and sent the many startups and VCs it backs into a mad scramble. After hours, shareholders started selling, which plummeted the Valley's biggest bank's stock by over 80%. This little snafu could be some insight into the banking world, which is definitely not feeling stable given the Fed's moves and messages. That's it for now. So have a great day and a great week. And until we meet again, keep up the good work.